US stock indices have settled down a bit following the sell-off that we saw after Fed Chair Jerome Powell's first day of testimony in Washington. Is this the calm before the storm? Keep watching. Hello, I'm David and this is Trading Today. Let's just cast our minds back all the way to Tuesday when we saw the major US stock indices fall quite sharply in response to Jerome Powell's first day of testimony in Washington. The Dow ended that session down 1.7%, the S&P down 1.5% and the Nasdaq down 1.3%. Markets were spooked when Jerome Powell made it clear that he said that the Federal Reserve could carry on raising rates a lot more than had been factored in by the markets. And in fact, the markets have had to move on the back of that. There is now a 78% probability of a 50 basis point rate hike this month, and that's up sharply from previously to Jerome Powell's speech, where it was around 32%. So big jump there. Now, Powell also said that nothing is written in stone, that the Fed was open-minded about whether it's 25 basis points or 50 basis points in this month's meeting, but bear in mind it's going to be data dependent. He's made that quite clear, really. And ahead of that decision, we're going to have US inflation data in the form of CPI and PPI. Those are both next week. Before that, however, we have a lot of jobless figures to consider. First of all, on Wednesday, we got the latest update on private payrolls, the ADP jobs report. This came in higher than expected, so good news for people looking for work. Also, the weekly jobless figure, better than expected. Sorry, I beg your pardon. Job openings, better than expected. So more jobs available out there for people looking for work. Today, we're going to get an update on weekly jobless numbers, and tomorrow it's the all-important non-farm payroll data. Now, bear in mind, these have been very good of late, very positive for the unemployed. The unemployment rate is still at a 54-year low. The Fed is still worried about this, as I keep on banging on about it, because, of course, that low unemployment could lead to price pressures, wage price pressures, which will drive up inflation once again. So you can see how the Federal Reserve is concerned about this. So these are all things to keep a close eye on. We are data dependent now, so I think the market could respond quite violently if we get things out of line with expectations. So plenty of opportunities out there and plenty of reasons to be careful. Thank you very much for watching. I hope you found this of interest. If you have, please like and follow, and best of luck with your trading. Goodbye.